Hello there, Maverick Traders. This is Rob Reinhold. This is the last week of June, and we've had a pretty interesting market this summer. Typically, we have sideways summer markets. Not this year. We've got a lot of action going on. So let's take a look at last week, and let's go through all the stories so we can get ready for the week ahead of us. Last week, well, actually the last 2 weeks, we've been calling for a pullback. 2 weeks ago, we were wrong. The market ignored us and kept going higher. And last week, the market, I guess, decided to listen to us. Look, the market doesn't care what we think, what I think, what you think. It was just ready for a pullback, and that's what happened. So we had our first down week in 5 weeks for the S&P and the first down week in 8 weeks for the Qs. So look, this wasn't a bold call. This wasn't a hard call. Market had been up for 8 weeks in a row, and you call for a pullback. Yeah, I'm not going to pat ourselves on the back too hard for that one. We also did hear from Chairman Powell twice last week. He was testifying before Congress, and basically he told us what the FOMC told us 2 weeks ago. We're going to be raising rates at least once or twice this year, which the market wasn't prepared for. But 2 weeks ago, when they said it on their FOMC statement, the market didn't care. And guess what? He said it again this week. The market didn't care. The markets really don't care about higher rates going forward. However, let me tell you who did care. The overseas markets. So the overseas markets and the small caps have been wildly underperforming, and it's because the US dollar is strengthening and interest rates are going higher. And these are not good things for emerging markets and also for small caps. We're going to take a look at a chart of the world index and see how much weaker it's been than the S&P. The only other thing of any note that happened was we did get some weaker flash manufacturing numbers. These are different manufacturing numbers than the ISM we get. They're not really all that looked at, but we didn't have a whole lot else to focus on this week. So we did get some selling on Friday, and this was because we also got some weak numbers out of Europe on their PMIs. European PMIs were extremely weak. So that sent the markets down on Friday morning overnight because there was a lot of weakness in overseas markets. Let's break down these markets and let's look at all the numbers here. So last week, down week across the board. So if you see, Dow was down 1.7, S&P and NASDAQ down 1.4, small caps down 3%, oil got clobbered, down 3.3%, gold down 2%. That is a big move down in gold. Gold and the US dollar are inversely correlated. The dollar had a nice week last week, so gold went lower. Let's take a look at the charts and see, okay, we had a down week. Where is that in the term of the whole cycle? We talked about how the S&P has been moving. We had this long base, and we said, hey, once we broke out of this base, we had to become bullish. And sure enough, it runs out, high bases, takes off. Okay, so here we are. We had 1, 2, 3 days of down of a pullback. On Thursday, we got a bullish engulfing candle. Now, I did the end of day video on the end of Thursday, and I said, look, this is a reversal candle. You cannot ignore it. However, we need a confirmation candle on Friday, or else that is not a reversal candle. We gapped down due to the weak PMIs overseas, and you can see the candle we get put in today is not a great candle when you take a look at, okay, are we bouncing right here, right now? However, take a look at it. Both of these candles are green, which means there was more net buying than selling during the hours that the market was open. There are buyers out there. You typically see these green candles at the end of pullbacks. So we're seeing them right here. We're seeing green candles at the end of pullback. However, I want to be clear here. We do not have a confirmed bull pullback yet. We could trade all the way down to this high base, and it would be perfectly fine. This looks to be about 429. That's another 1%. If we could trade down to there and bounce, you know what? That would still be a very intact uptrend. If we break below 429, well, we have to take a look at some other areas next, like the 50-day moving average, stuff like that. The market's still pulling back. However, it is showing signs that it wants to bounce. We come over here, take a look at the NASDAQ. Its pullback hasn't been quite as deep. And you can see here, the action on the last 2 days has been actually fairly constructive. We had the bullish engulfing, and then we have a doji. So we're putting in reversal candles. What we're not getting is the confirmation candles that say, okay, the direction has now changed. And I always use the balance scales as the example. Buyers on one side, sellers on the other. During this period, there was clearly more buyers than sellers. During the first 2-3 days of this week, there was clearly more sellers than buyers. It had shifted. We are now basically right in the middle, right in the center. We could go either way. If we do drop, then we probably have a little bit more downside. We've got some support levels down here. Ultimately, the 50-period moving average before we have to admit that it's no longer a bullish market. But it's showing some signs that we do want to bounce. Now, this is the S&P and the NASDAQ 100. I wanted to show you a chart of the VT. This is the Vanguard Total World Stock Index. And you can see it is showing a different story here. Look, it's still bullish. We still have rising moving averages. We still broke out of a high base here. But look at where we are. We have sunk all the way back down below this little high base point. We are getting close to violating this breakout point and the 50-period moving average. It is showing us that either the U.S. markets are going to fall and come back down and international is going to pull it down, or U.S. markets are going to stabilize and pull international markets up. These are correlated markets, but I wanted to show you that it's not all rosy out there. The U.S. looks much, much better than the rest of the world. And if the rest of the world keeps getting worse, it will pull the U.S. down with it. If it can stabilize and the U.S. market stabilize, it's going to pull this up. But I still want to be in U.S. equities for sure because of relative strength. You want to be where the strength is. So this week, let's talk about our market outlook. The pullback is still in effect. Monday, Tuesday, Wednesday, I actually fully expect there to be our confirmation candle somewhere on those 3 days. I don't know if that's going to happen. I don't get to tell the market what to do, but that's what I'm watching for. I'm seeing that there is bullish activity around these levels. All I need is that balance scale to flip from being uncertain to on the more selling side. I needed to flip to clearly the bullish side. At this point, and we said this last week, we actually said this 2 weeks ago, we're paring back our bullishness. After we had the big run, we said, hey, let's pare back our bullishness. Let's not be as bullish as we were. I still think that's where you want to be. You want to be paring back your bullishness, and you want to wait to add on more bulls. We will get a signal at some point. It'll make it clear. We'll add on more bulls. But I think at this point, you want to be more to +1, +2 on your portfolio. We do hear from Chairman Powell again, Wednesday at 9:30. And I'm looking at where we are in the calendar, where we are in the season. We had this big massive run in May and June. I could easily see us hanging out, going sideways for the next couple weeks, and really into maybe to where we're starting to get second quarter earnings in the last part of July. That would not surprise me whatsoever. Let's take a look at the economic calendar this week. We've got on Tuesday, we got core durable goods, consumer confidence, home sales, and the Richmond Manufacturing Index. Look, none of those are all that big of a deal, but because there's nothing else that is a big deal, the market is going to hyper focus on that. And they're probably going to focus on that manufacturing index, would be my guess. Other than that, we do get a reading of final GDP for the first quarter. No one cares what happened January through March. That is so old news. No one cares. As you can see, on Friday, we do have what is probably the biggest news this week, the core PCE price index. This is the Fed's preferred inflation measure. If this number comes out hot, the market will not like it. If this number comes in as expected or lower, that may be the thing that gets this market moving to the upside again. But really, nothing big until Friday on the core PCE price index. So let's break down this all in a score. We are still at a +3. We have to be. We have the S&P is above a 20 moving average. It's above the 50, and these are sloping higher. This isn't a discretionary scoring system. This is a literal scoring system. If this market pulls back 1 more percent, we are now going to be at the 20. And all of a sudden, we're going to have to move it down to a +2. It's just what we're going to have to do. We have to do that. And then again, this is telling us, okay, pare back some bullishness. Don't go bearish, but just pare it back at this point. Once we get the green light, we can put it back on. But look, we don't know what's going to happen. We'll have to evaluate what sees. If the market bounces early next week, we're just going to stay at a +3 the whole time. We'll put on some new bulls, and we'll hopefully enjoy another leg higher. If we start to break down levels, we're going to have to pare back this bullishness. As I said, we started talking about it 2 weeks ago. I think it is still the prudent place to be, more of a 0 here on the week. I think we could easily get some weakness at the first 2 days of the week, get a bounce somewhere in the middle of the week, and close basically flat for the week, but have a scary day or two in there where people panic. I would not be panicking in this market. Make sure you have your trades on. Again, in options trading, we do a lot of just position size for max risk, so you don't have to freak out. Let's go ahead and take a look at sector by sector. Last week, everything was down. However, let's take a look at what was down the least. Healthcare. Healthcare was the best performing sector last week. It barely dropped. What was the worst? Real estate. Real estate got absolutely hammered. I'm now starting to hear some chatter. And I know that's a very technical term. Hearing some chatter, and it's stuff I read online, it's stuff I watch on TV. There's starting to be some chatter about the commercial real estate market and some potential troubles that might be coming down the pipeline. And that actually caused there to be some selling in the real estate sector. Energy continues to be terrible. We've been more bearish and bullish on energy, and it was terrible. Take a look at tech. Tech has actually cracked a bit. It cracked this week, and mostly on Friday. Tech is starting to underperform the rest of everything else. Remember, this was the outperformer. This was the star. However, I want to go over here to communication services. This has also been a superstar, just like tech. Look at it. It actually held in better than 5 other sectors. So communication services to me still looks like it wants to hold in, but it's very important to take a look at these sectors and say, okay, which ones are actually weakening? Technology is starting to actually weaken. Real estate is starting to weaken. Energy was already weak, but it's still weakening. Financials. This was a disappointing one. I thought financials was going to do a whole lot better this week, and it absolutely fell apart. So let's go through them one by one, and let's update our scores here. Last week, we were at a 0 on utilities. It gets a downgrade, -1. We were between the moving averages. As you can see here, we're now down here, moving lower instead of sideways or higher. -1 on utilities. Communication services. We had a pullback. Yes, we did, but take a look at these 2 candles. That's actually a really strong candle on Friday compared to the market. There's buyers coming into communication services. It still is at a +3. It's holding on to its strength. Next up, we've got real estate. It went from a +1 to a -1. So just starting to look like it was going to break out, and then boom, got hit and killed. We're going to move this one to a -1 on real estate. So that's a -1. Let's go on next to industrials. I really liked industrials. It pulled back pretty hard this week. But let's take a look at where it pulled back to. We're still well above the 20, well above the 50. We could even pull back some more and still be at a very strong +3. At this point, I'm still having to say that industrials is the strongest sector compared to some of the other ones. Take a look at healthcare. Healthcare last week was a 0. This week it is a 0. This is actually pretty good in the fact that it didn't get downgraded. It held in quite nicely, and you can see it almost closed exactly where it closed last Friday. This to me is showing relative strength to the rest. I cannot say the same thing for financials. Financials really looked to be breaking out last week, and it was very disappointing. So this one is getting downgraded this week to a 0. However, consumer didn't get any memo. They didn't get any memo whatsoever. Yes, it pulled back, but I mean, take a look at the pullback. This is a fantastic looking sector. This is the best looking sector at the moment. Consumer. It's had the biggest run, and I know people are wary of it, but it's still the best performing sector at this moment. We take a look at tech. Tech got a downgrade. Tech was at a +3. We're now at a +2. We did pull back to our 20, so we're at our 20-period moving average. Now look, we are getting some conducive candles. Definitely can't throw in the towel on tech, but tech is weakening compared to consumer. No question about it. Let's talk about materials here. Materials looked good last week, +1. It pulled back. Here we are. We're at a 0. Here's another sector that was downgraded this week. It had a much bigger move lower than the rest of the market did. And energy. Energy is in a world of hurt. We went from a 0 to a -1, and you can see here, we're at some major support here. If this goes any lower here, it is trouble for the energy sector. Let's rack them and stack them here. This is where we were last week. So we saw two sectors, highly interest rate sensitive sectors, get downgraded. We had financials get downgraded as well. So financials, utilities, real estate were downgraded. Technology, downgraded. And energy and materials. I want you to pay real attention to what got downgraded, what weakened, and what didn't. So we have 6 sectors that weakened. Tech, materials, financials, real estate, utilities, energy. Those weakened. What didn't weaken? What held in? Look, they didn't strengthen, but they held in. Consumer, industrials, comm services, and healthcare. That is telling you where you want to put your money. That's where the strength and weakness is in the market right now. So let's take a look at a real estate trade. Last week, we did a sideways trade on Southern Company in the utility sector. We've been flipping between utilities and real estate here. We had a butterfly on this one, and you can see this one weakened a bit, but it's still within our profit range. The middle of our butterfly is 73. We put this one on to be a little bit more bullish than sideways. This thing just needs to creep back up. If it breaks below 70, definitely not good for our butterfly, but we do have until July monthlies. So we have 4 weeks on this trade. There is no reason at all to panic with 4 weeks left on a butterfly. So this one is down slightly. This week, I want to take a look at American Tower. Real estate weakened. So because real estate weakened, I want to take a look at some bearish trades in real estate. So American Tower, you can see here, has been weakening really for the last couple months. No question about it. We've got this downtrend, and every time it comes up to this downtrend line, we hit some resistance. There is some support right here at 186. After that support, we're all the way down here to the 180. So it's just a matter of how you want to play it. Do you want to play it aggressively bearish, or do you want to play it not aggressively bearish? So here are your two choices. Aggressively bearish is going out to July, the monthlies. There's only monthlies available on this one. And you're going to do the 180, 185. So again, this is going to be all delta. Or you can say, you know what, I don't want to be that aggressive. I want to be more theta. And you can do the 185, 190. You could absolutely do that. If you wanted to do a targeted butterfly, you could do that as well. So look, we're not looking for this one to crash. We're just looking for it to drift down into this area down here. This is where we want our profit area to be, down here in the 180 to 185. Let's go next to comm services. Comm services is still to +3. Last week, we had a trade on EA. We liked that it was just about to break out of the high base, so we did a diagonal call spread, 125, 130. We wanted it to close at 130 on Friday. Again, it didn't care what we thought. It closed at 125. This trade was closed out at the end of the week for a small loss on a diagonal. Again, diagonal call spread. Here's your risk graph. 130 was the top of it. 125 is probably right down here. So this is where we were in our risk graph. Take the loss. We're going to move on. We don't like the fact that it broke down below its moving averages and they flattened out. It's no longer a trade we want any part to do with. This week, we're looking at Facebook. I cannot call it Meta. I think Meta gives it too much good vibes. When you say Facebook, no one likes it. No one's happy about it. But look, regardless of how I feel about Facebook, look at the stock. On Friday, totally ignored the weak market, totally ignored everything. Says, I want to go higher. If comm services continue to stay strong, I expect Meta to stay strong as well. So, how am I going to play it? I'm going to play it a very, very wimpy way. A $5 spread on a $300 stock. That is very, very wimpy. That's like a 50-cent spread on a $30 stock. So I'm just looking at 285 to 290. I'm just looking for a little move, just a little move higher, and I'm going to give it 2 weeks to get up there. Let's take a look at healthcare. Healthcare last week, we were long. We had a 10-12 July monthly bull call spread. You can see it pulled back. But look at these candles in the pullback. These aren't nasty candles. It's on low volume here. This is kind of what we want to see. Look, we'd love to see the price go up. It did not go up. It went down. But we still have 4 weeks left. And again, we have a 10-12 bull call spread. A lot of time left on this one, but it is sitting at a loss. This week, again, healthcare held in. Healthcare was the best sector. So we can say if the market is going to bounce here, healthcare is probably going to be leading the pack. So we're going to take a look at Dexcom. We are right in the middle of a bull pullback. We broke through this resistance right here at 126. We came down today, we pierced it, and we recovered, and we closed up for the day. This has not confirmed yet. We need a green candle. One more green candle, and this will be confirmed so we can jump in. How do we want to do it? Well, they only have monthlies on this one. We can do the 125, 130 bull call spread. As you can see, we're not asking this thing to break it to a new high. We're just saying, just go up $4 over the next 4 weeks. If you do want to be more aggressive, you can just go with those 120 calls if you do think we're headed to a new swing high up here in the 136, 137 area. Just the straight calls would be the way to do that on Dexcom. In the industrial sector, last week, we had XPO Logistics, and it was basically flat. So, okay, this is what we'd like to see. When you are long a stock and the market goes down, if your stock is sideways, that's a good sign you're in the right stock. Now, granted, if the market keeps weakening, the stock is probably doomed and this trade's probably doomed. But if this market turns up at any time during our time frame, this stock is going to appreciate nicely here. So we're happy with the price action on XPO. This week in the same sector, we do like industrials. They held in. Here is Delta Airlines. Take a look at this huge move higher. Huge move higher, but no one is selling. No one is letting this thing pull back. It is a high base. I mean, just think about this. Huge run, no sellers. It's a little bit dicey to buy these, and I get it. It looks a little extended. This is where I love to pull out my diagonal call spread and say, okay, I tell you what, I'm going to do a 1 week trade. Sorry, this should be June 30th. I'm going to do a 1 week trade, and then I'll make another decision on next Friday. I'm going to do a July monthly 40, and I'm going to sell the 43. So as you can see here, I'm selling basically resistance. So my risk graph is going to look like this. And if it gets to 123 or goes higher, I don't make any more money. But if it hangs out at 123, that's a really good gain because I've got time decay on my side. Look, if it breaks out and run, I'm okay. I don't make as much money. But if we stay in this area, guess what? It's still profitable. We really like these diagonal call spreads on these high bases as we wait for them to break out. And then next Friday, if the stock's still at 42.50, 43, we can decide, do we want to sell next week's 43 or 44, or do we want to hold the long calls, or do we want to just exit? This week in the financials, this is a sector that really underperformed. This is a sector that I thought was going to be a very nice sector going forward. It did not. So look, I used to fight it as a young trader. I used to think my opinion mattered. I thought that the financials are going to be strong. I did analysis that they were going to be strong. They weren't strong, so I'm sure the market is just temporarily wrong, and I'm going to be right in the end. Yeah, I don't do that anymore. I just admit I'm wrong. Financials, I made bullish trades on financials. They're no good. I cut this trade on Friday. This is US Bank Corp. It was a diagonal call spread, so I lost a small amount. I'm going to cut it, and I'm just going to move on to the next one. Because this sector is no longer bullish, I don't want to have any sort of bullishness in there. So if I'm going to add a new trade into financials, it's going to be at least sideways or lower. And I came across Coinbase, and I thought to myself, wow, I would never think about doing a sideways trade on Coinbase. It typically has a little bit too much volatility. But you can see the range here is basically 50 to 70. It's going 50 to 70, and it's smack dab in the middle. And I think it's going to be a little bit weaker here. So I'm looking to open up a butterfly. It's just slightly bearish here. So 58 is going to be the middle of my butterfly. So I'm going to go to the 50, 58, 66. So you can see this is my range here. This is my range I'm looking at the stock staying in, and my profit range is probably right about in here. I'm going to give this 2 weeks, and we're going to see where it is at the end of 2 weeks. So sideways in financials on Coinbase. The consumer sector was strong. We got into a trade on Borg Warner, and you can see here we were breaking out nicely, and the stock turned down hard. Big sell-off on Wednesday. These candles aren't great. Look, I can't spin this. I can't say that this trade looks okay still. This trade looks terrible. Here's the thing. Based on the strategy you use, will determine your position management. I used a bull call spread on this, a vertical spread all the way out to July monthlies, July 21st. My rule is I position size them for max loss, and I never touch them until Friday's expiration. Look, I doubt this thing's going to come back. It looks terrible. Here's the great thing about trading that strategy that way. What if it does? I'm not forced to make a decision on what to do with this. I already position size for max loss. This thing could easily recover and turn back and turn into a winner. If I sell it here, there's only a small amount left in the trade anyway, because the trade was so bad. This is why you position size for max loss. And you know what? We may get pleasantly surprised in 4 weeks that this thing has actually come back up and trading more closely to 50. I don't think it's going to happen, but trust me, I've been trading long enough that that does happen sometimes. When I was out there looking for trades in consumer, look, I don't want to be long consumer. And again, this is just a personal opinion. Consumer's gone very far, very fast, and I don't feel like being long consumer. But when I looked at everything, when I looked at the chart of consumer, when I looked at its relative performance to everything else, I had to look at a long. So here we are. Here's the long I'm looking at, Ross Stores on a high base. Great looking candle today, but I'm going to be doing the same thing here. I'm going to be doing a diagonal call spread. So I'm going to take a look at a 105, 110 diagonal call spread. I'm going to put myself in a situation for 1 week where I've got a risk graph that looks kind of like this. Okay, if it takes off and goes up, I'm happy. If it goes up to 115, I'm not as happy because now we're down here and I don't make quite as much. But look, anything like above 108, it's a win. Anything below that is a loss. And then below moving averages, I'm going to cut and run and take my loss and go on. This is a nice bidirectional trade in a market that's not all that clear right now. But we found a strong stock in a strong sector. Diagonal call spread, bidirectional trade. It's an easier trade to make than going really directional. In technology, last week we had the trade desk, also in a diagonal call spread. 77 was our top. We really liked this price action here. So it basically closed just a little bit under our max gain point. I'm still holding the long calls. I'm going to be reevaluating this on Monday, seeing if I'm going to turn it into another diagonal call spread or just hold the long calls or dump everything. But nice trade on this one here on the trade desk. This week, I'm going to go bearish. Now look, let me tell you why I'm going bearish here. I've been playing a lot in tech, and my techs have done really well. However, the technology sector is one of the sectors that got downgraded +3 to +2. I've got some tech stuff that is like that trade desk. I still have that position. So one of the ways to reduce your exposure to a sector is to go short in a stock that's in the same sector that you're long. So what I went into FinViz. I asked for technology stocks that had enough volume. And I basically said, what is the stock that's had the worst last 6 months, but the best last month? So again, what I'm looking for is the weakest stock that's had the biggest run over the last month. And this is the one that came up. Look, it's not a great chart pattern. All the other chart patterns I didn't really love. So I'm going to take a bear call spread on this one, a 14-16. So I'm just coming all the way down here saying, okay, you know what? I'm opening this up because I think this stock was one of the worst stocks for the year, had a huge run, probably on short covering. And I'm playing this to the downside just to add some bearish delta into this sector. We talked about pairing back. I think that tech is one of the sectors you do want to pair back in. You don't want to go bearish, but this is just a way for me to pair back. And you can see I'm doing it for 1 week. So you may have some different outlooks. You may have some different needs. I'm looking at my portfolio saying, you know what, I want to be a little bit less bullish in tech over the next 5 days. This is how I can do it, by adding a bear or two into that sector. Let's finish it off with materials and energy. Last week we were long CF Industries, and it was up slightly for the week, but take a look at the week it had. I mean, looking really good on Wednesday, had one down candle. We were up 4 out of the 5 days. I still really like this trade. We came back, put a long lower shadow in. I think this trade's got some more to go to the upside. That being said, the sector did weaken. So I don't want to add on more bulls. I'm going to be adding on a sideways here. And the big question is, where is my sideways point? So this is LYB, LyondellBasell. It's a chemical company. And I'm looking at this saying, okay, here's the range here recently, 93 to roughly 86. I'm going to go right to the middle of this, 90. 90 is going to be my midpoint. And I'm going to open up the 85, 90, 95 butterfly for July. So I'm just looking to say, hey, I think the stock stays in this area. Just where I think it stays, right in here, and I think it's going to be closer to the middle, right around that $90. And in energy, look, I've been in a lot of shorts and sideways shorts in energy over the last little bit. We were short in Oxy last week, and Oxy got killed. It was down 3.5%. I took profits on this one. It was a diagonal put spread, so nice gain on this one for 5 days. Okay, like the same thing what I said with tech. We've been short or bearish in pretty much every single trade in energy. It could go down more, but I'm just going to say, okay, let me look for a sideways here. So here we are. Let me find a stock that hasn't really gone down and really hasn't gone up. Here we are, Range Resources. Same thing here. Where's my midpoint? I actually like my midpoint right where it is. So we got 30 and we got roughly 26. So again, I think it's going to be right here, 28. 28 is my midpoint here. So I'm looking to open up 2 weeks, the 25, 28, 31 butterfly on Range Resources. Right here in this range. I think this is a decent trade here in the energy sector. I'm not really worried about it rallying. I do think it could fall some more. If it does, this one probably isn't the best butterfly. But if we stop falling here, just stabilize, this is going to be a great trade here on RRC. Well, that is it for the trades. If you want to share other trades with other Maverick traders, you know where to go. Go to the website, log into the members area, and go into the forum. We love an active forum. We love when our traders are helping each other make some money. Wrapping this up, the market pullback is not over. I talked on Thursday after the market, and I said, look, one more candle, and you have to buy. We didn't get that candle. We got a weakening, actually. So we are still not to the point where we can really go back heavy to the bull side. We're still in the point where we should be, more neutral than we were 2 weeks ago. At some point, we'll get a signal, and that's great. But we have to watch for that signal. And we're really keeping an eye on the sectors that are weakening. We talked about the 6 sectors that weakened. I think it's a little bit more prudent to be lightening up in those sectors. Trading room for the week. Everyone have a great weekend. Goodbye, everyone.